Hello DeFiChain gang, welcome to today's Fireside Chat. I hope you are all having a great day out there and reserved some time for an exciting guest tonight. Before we start today's show, we need to sort out some housekeeping items like normally. First of all, raise your finger, push it down on the like button. That helps the video and our channel dramatically, and YouTube wakes up after all. Secondly, subscribe to the channel if you haven't done yet and click the bell button that you not miss any of the new shows. We are very happy that we finally reached the 10,000 subscribers. Now we are going for the next 90,000 to reach 100,000 hopefully soon. So this was the boring part. Now to the exciting stuff. We have a guest tonight who was never here on the Fireside Chat. He is super active on DeFiChain. A lot of people might have known him for quite a while, but he got really active when he stepped kind of outside on the stage in front of the curtain. It was around February, March when he got really active in one of our Twitter spaces, because he had a lot of really great inputs and ideas how we can make the DeFiChain ecosystem even better. So I'm really stoked to welcome him, and there he is. Kügi is our guest tonight. Kügi, welcome to the show. How are you?
Hello, thanks for having me. Yeah, I'm good. Thanks for not saying I came out of the closet. That's
Hey
yeah.
guys.
No,
Yeah, we were joking a lot.
sorry. Yeah, we said you said I'm fine with joking. So
Yeah, no, exactly. We had a lot of jokes just before, even thunder and lightning. I think some transformer blew up around Kügi's neighborhood. No internet, so we're doing this on the hotspots still, I guess, right?
no,
You're back?
it's back. It looks like
Okay,
everything's back now.
everything back. So if Kügi disappears, there's heavy thunder and lightning in Upper Austria somewhere. So then we just have to wait to reconnect. So let's try to get this going. Kügi, so much to talk. We brainstormed a little bit what we want to talk about. There is an endless list. So let's see how we're gonna maneuver through all these really exciting things. Kügi, I know a lot of people might know you already, but tell us a little bit, who are you? Where do you come from before we go more into the crypto and financially related topics that people have a little bit of background? Who is the dude?
Who is the dude? I'm the dude.
You're the dude.
Yeah, Kügi, born and raised in Austria, as we say. I studied technical mathematics in German. German words, it's mathematical computer science, basically. And after that, went into coding, programming. It's always the topic. What do you do if you study math? And I
You
went
become a
into the
teacher normally,
coding.
right?
No, that's everybody says that. What do you do with math? Teaching?
Yeah.
No, it's mathematical computer science.
Okay.
That's a different There are different studies for teaching and for non-teaching. But thanks for asking.
You're welcome.
Yeah, then normal computer career. Then I came into the position in a digital online startup, basically up to the position of CTO, tech lead, kind of, where I learned to maneuver through the difficulties of having customers, having technical debt, having all that stuff, and getting everything under one good product, kind of. So yeah, that's that. And then I came sometime into the crypto space, and then the
And you,
stuff that we talk about later, right?
and the rest is history, so to say. Are you still involved in this startup, or did you?
Yeah,
You're still involved there. Okay.
I um, it's no longer a startup. It's bigger now, but
Okay.
I reduced hours basically. So I stepped down as the CTO. I yeah gave up the topics, a lot of topics. So I'm officially, when the government asks, I'm now a small part-time developer with a low salary.
Okay. Cool. Yeah, we need those as well.
Yeah.
Absolutely.
If someone asks what I'm doing, I always say I'm a full-time dad because
Yeah,
I have a 6-year-old and
you've
I
got a
spend
son.
most of my time with
Where's
him on the playground. So.
where's your son at the moment?
in kindergarten.
In kindergarten. Okay, good. So he's not gonna take part in our little conversation tonight then.
No, he loves that, but no.
Okay, he's quite active, right? What I've heard in our previous calls.
We are quite active. Yeah,
Okay,
it's he. We need to get out of the flat every day,
okay,
otherwise it's crazy. But
cool,
I mean, it's 6 year olds, right?
cool.
It's
Now, I'm happy that you're here because, first of all, so many topics. Secondly, there are not so many Austrians who are active on DeFiChain. I've got the feeling we are still a lot under German influence. I mean, I'm half German, so really, really highly appreciated. I know the area where you come from quite well. I was there with the Austrian, how do you say, Bundesheer, with the army. So I was
mean,
crawling through a couple of the woods around where you live. So good and bad memories at the same time. Hey, Kügi. That's your nickname, by the way, right? Or
Kügi,
is
yeah,
that Kügi?
it's
Is that in your passport as well? We don't want to reveal your real
no,
name.
that's
Okay, that's your nickname.
that's my professional nickname, say it this way.
Oh
That's the
wow.
nickname I got in the company.
Okay.
So that professional, it's the everybody in the company calls me Kügi,
Knows
and
you.
it kind of stuck.
Okay, good. So we're gonna keep that. So you are our Kügi. Fantastic. So studied mathematical computer science. Worked in an online startup. Let's shift gears and look a little bit into. So before you came into crypto, you told me you did a lot of stuff with financial markets already, right?
Yeah.
So how how
Um,
how how, how did you get there? Was this part of your studies, or was this just some interest, or you needed really money and thought,
no,
what can I
I
do?
mean,
How did you get there?
every student needs money.
I know, I know. I
And
was
I
selling my
was I
blood.
was
I
a
was donating blood at that time.
yeah, I'm plasma. I was
Yeah,
donating
yeah,
plasma.
exactly.
Yeah,
I was donating blood. So I was well paid, 6 times a month.
yeah,
Paid me very well.
yeah.
I looked like a drug addict. My arms had a lot of little holes.
Exactly. Once we had a meeting with the old classmates, and one asked me how I'm doing, and I was like, "Yeah, I'm getting money out of my veins," and he was like, "What?"
I know that. I
So
know that. I've
yeah,
been there. I
that's
was a student.
I was a really low budget student, and basically doing the studies. Yeah, students always think they know the world better. They know how the world is going, and
Okay.
everything is you're smarter than everyone, of course.
Mm-hmm.
And there was the general topic of financial markets,
Mm-hmm.
and we had it's not directly with the studies. We have the financial part of the math studies, but I was doing the computer science, but I just got interested from via a friend basically, who worked at yeah, hedge fund, not a hedge fund, as a marketing guy
Mm-hmm.
for a hedge fund,
Mm-hmm.
and he was like, yeah, automated systems and futures, forex, woo, crazy, you can do a lot of stuff there, and I always liked algorithms and math and structures and abstract systems and everything. So we started together to get into that and started developing basically based on technical analysis, um, yeah, mathematical systems and automated trading systems for the financial markets. And yeah, low budget student, I developed a lot of the stuff. I wrote them, I ran them on real data, but not on real money because I never had the money to run it. And I'm a very risk averse guy, so I don't like risks at
Mm-hmm.
all,
Mm-hmm. Mm-hmm.
theoretically on an abstract level. But I got into the whole topic, into the whole what is trading like? What do you need? What's risk management? What's money management? How does it exchange work? I even got to the point where I wrote my own exchange. I had a online website where I wrote a whole exchange with order matching and everything with the order book behind it, just to get the mechanics. And I thought like, yeah, as a student, you always know it better. I thought like I make a new online game where everyone does this trading simulation where we
Mm-hmm.
trade 100% technical stuff. And I mean, that's kind of what also makes the whole crypto space so interesting. Because back then I had this, you have the technical analysis, and technical analysis is based on the chart. You have nothing but the chart, or
Mm-hmm.
you think nothing but the chart matters. And the financial markets are always also affected by the outside world, basically. So the chart alone is not everything. The technical analysis will kill me for that, but it's it's like that. And there it was like where I said, okay, what would it be if we have something that has no connection to the real world, just a pure technical thing. So I did this exchange. I had tokens or assets on there. I said, okay, you have different assets with different size, and you have a market maker behind it that just gives you the stuff. And what would happen if people trade that? Do you have the psychology of the market where I say, okay, it's generally just how is everybody feeling today? Are we bullish? Are we bearish? Market goes up, market goes down. If there are no news, nothing, how would the market behave if it's just that? And that's why I built this stuff. So
this was a system completely in a bubble, disconnected from the outside world in some way, and only behaving based on technical analysis. And how did that? So you did this. How did the experiment go? Does it work out?
Well, I learned that just because you make a website doesn't mean that someone is using the website.
So you wanted people to come in and trade on that website and use that stuff.
The thing is, trading only works if you have a lot of people doing it. So I built the stuff and I showed it to my colleagues, and they were like, yeah, that sounds interesting, because everyone was like, you get rich with financial markets, you get rich with trading, so trading is fun. And everyone was like, yeah, let's do this, let's try this. And they traded, and I soon found out that without a market maker, the market is pretty boring because you have 10 people trading, everybody is buying now, and then nothing happens. So you need, that's one of the things where like you need huge amount of people really actively participating in the market, or the market maker who pretends that there is active people in the market, basically. So because the market maker, in theory, the market maker should just provide a market that people can trade and not trade actively. But I think, I don't know, the whole wash trading stuff with the exchanges, how much of that is really active, because I also had back then a lot of connections from online forums and stuff with big traders who really trade, who have connections, trading desks and everything, where you hear about a lot of stuff about the market makers and because you have the incentives that they trade. You have the market makers that make the market, but on the other hand, who actively trade, that you have activity, that you have a volume that you want to get through. And that's what you need. So the experiment basically was like, everybody's interested, it's fun, but without a market maker, without any insight or effect from the outside world, it's a bubble. And as long as you don't have this critical mass, we have a lot of people who change their mind regularly and therefore move the market, nothing happens. So you need to get above this point that you have the community, you have the size. But yeah, as a math student with no marketing skills and no design skills and not a lot of network, this critical mass is pretty far away. So that's basically, yeah.
But that was fun. It was interesting. Was a very interesting learning story where you learned how the real world works at the end, right? The theory is
kind of
gray in some way.
I mean, it was also like, with that exchange where you see the real order book and everything, a lot of I showed it to the guys from the financial forum and the community there, and they were like, just watching that and trying out the stuff, because there you can go with high level of a high volume into the market without really using money. Because usually if you try out an exchange on the testnet, you don't have a real order book. Or back then that was like that. You can pretend to do, like now you have the testnet on the exchanges. That's why I like crypto exchanges, or fell in love with the crypto exchanges, because suddenly you have all that. What I did, I don't know, 12 years ago on my experiment, the crypto exchange is doing it now. They have a testnet that just trades somehow and something. And there they saw like, how is a gap really happening? What does a spread means? What is an opening gap? How does an opening gap happen? How is the market made when you say, okay, the order is here, suddenly there are no orders beneath it. The order book gets empty and the market crashes. Why is a gap filled? Because nothing was traded there and all that stuff. Where it's just the mechanics behind the stuff, the scenes, how exchange work, that a lot of market participants just don't know. They just don't understand how, and most of them don't need to, but it helps you understand how some dynamics work and also when you then go to a DEX, what makes the DEX even more interesting because it's completely different. But yeah, we are drifting into the details, right?
No, but it's super interesting. I never had on live here who has experience. Have you never thought about going really professionally then in that direction and say, hey, I wanna work for an exchange. I wanna start my own exchange. I wanna build a business around an exchange. After your
Of
experiment,
course.
you kind of
As a student, I was like, of course, you want to build your own exchange. I
mm,
tried to build my own exchange, but yeah, the first thing you learn when you try to build your own exchange is that an exchange is pretty big, and one person not good.
mhm.
And I'm not a CEO. I'm not an entrepreneur. I don't like risks. So going all in, saying I'm now building that stuff. I build
Okay,
up a
get it.
company.
Mm,
I'm the tech guy. So if someone needs the code, someone needs the technical support, I would be happy. I would be happy to work for an exchange and build something there. Um, but it just the opportunity never came because I was never that deep or
okay.
that
Okay,
opening there.
get it. But you understand where your strengths are, so you don't try to overstep and do something what you're not comfortable with. But you said you would be so that you know the
That
technical
was a
stuff. So you
learning
think,
process.
yeah, yeah.
It was a long learning process. So yeah, I I really know, and we maybe we come to the on the next part, but I really learned the difference between knowing your strengths and weaknesses and acting accordingly.
Okay.
Because that's,
Don't say too much. It's gonna start getting really interesting. Yeah.
but
Let's.
yeah, so the part of I know my strengths and weaknesses, maybe sometimes a bit of
Okay.
them.
Okay, cool. So, okay, financial markets, you tried to build a trading system, all of these things. This was still forex. This was had nothing to do with crypto. So now the
I didn't try. I built
yeah,
trading systems. I
yeah.
had a lot of trading bots running on real data.
Okay.
It's
Okay,
just
so the trading spots
not
we
on
did
real money.
okay. And how did they go? They worked better than your little trading experiment from before?
Well, it was trading. It was a bot running on real data, so
Okay.
it ran. It ran on a simulated account on the real data because on a first futures then forex,
Mm-hmm.
um, and we ran it. We had it just see how it goes if it does what the backtest says. It ran good for a few weeks, I think. Then you find out that backtesting is hard. And if the backtest is good, that doesn't mean that the real life is good because I mean that's all the stuff where I knew from, for example, overfitting. I did a lot of machine
Explain
learning.
overfitting. I think not everybody will understand overfitting.
Uh, I did a lot of machine learning, some machine learning
Mm-hmm.
classes back when I was at university. Neural nets started to become a thing again,
Okay.
and
Mm-hmm.
was suddenly the shit. And there was this machine learning where you say, okay, you have something that should approximate a function, should do something.
Mm-hmm.
You feed it with data, with test data, so that it's learning data that it
Yeah.
learns how to behave. And to tell him, in this case, do that, in this case, do that. And the problem with overfitting is that you teach him test data, and if you teach him too much and too explicit test data, it's basically if the machine learning, the algorithm is too complex, too it can do too much stuff, and it's simple data, the machine learning or the algorithm basically memorizes the learning data. So it gets really good on the learning data on a learning data set. But as soon as you give him something else, he's like, I've never seen this. I do something random,
Okay. Okay.
basically.
Okay.
And that's overfitting, where I say, okay, I have this tested. I mean, in trading, in technical analysis, in chart systems, you have like, I look at the past chart and I can easily say, yeah, I buy there, I sell there, I buy there, I sell there, buy low, sell high, and it's perfect. And in the back test, if you design your trading system based on a chart and then test it on the same chart, it works perfect. As soon as you have a new chart, well, might not work perfect. So that's overfitting, where say you fit your logic, your algorithms too much on this test data.
Okay, so too much is not good in that case.
Yeah, exactly. And in machine learning, you have logic about it. You have algorithms that prevent that you see when you are starting to overfit. When you see that the fitting goes better and better on the test data with every iteration, on the learning data, and suddenly it gets worse on the test data. Then you know you're on the peak where from now on it's starting to memorize the learning data and not generalize the learning data set or training set, not learning, training set. But yeah, that's the same with overfitting on trading systems. So I say, okay, I look at the chart and I'm like, yeah, that logic worked. Like with Bitcoin in the bull market, when you come in an ascending triangle, if it breaks out, it goes higher. If you did that during 2017, and I did that, so I know it worked perfect. And suddenly the market changed, and you have a bear market, and a triangle is no longer it breaks out to the upside and once it's a fake out and then goes down. So
okay,
we're
gonna talk about how to be a successful trader in a bull market. We're gonna talk about it. But before we go there, how did you get then from Forex and from this trading bots? How did you get into crypto? I mean, it might be related, but how did it happen?
Well, the story of how I didn't go into crypto, basically.
Yeah, okay, because in the title we say first from Bitcoin denier to now Vault Maxi.
Yeah.
So now we are in the denial phase.
We're in the denial phase, exactly. Denial. No, the thing is, because I looked so much into the financial systems, into trading systems and everything, that was 2008. So around, I mean, I started with the trading stuff before 2008, but then the whole stuff came up, and it was like everybody in the system, in the community, and so knew that something is off there. And I got the feeling that the whole financial system is broken, as a lot of people back then got, like Satoshi. And I started searching for alternatives, because as a student, you think you reinvent the world. So I searched for how can we make the financial system better? What is the problem with the current financial system, with the growing debt and everything, fiat money, all the stuff, basics of financial systems, or the basics of money, basically. And started looking into alternatives, into alternative money, alternative financial systems and everything. And with that, on that research, I came to Bitcoin, and I found Bitcoin. I'm like, that sounds interesting. Let's look into it. And I downloaded the wallet and I let it sync the blockchain, which back then took a day to sync the blockchain. Not because it was big, because it was a few hundred megabyte of blockchain, because that was 2010 when I looked into Bitcoin. And I synced it. I was like, okay, now I have a wallet. It's something installed on my computer. That's nerdy. That's people outside don't install something on your computer. Smartphones weren't that big back then, so there was no you have a wallet app on your phone or something. Who will use that? You wait a day to sync the whole chain, and this is growing by a megabyte every 10 minutes. This is going exponentially up. What's going? I mean, not, but it's going up. Who will use that? Why should anybody do that just to send a bit of money? And back then there was no price of Bitcoin. There was I don't know, because I remember when I looked into it, I was like, okay, and how do I get Bitcoin now? I didn't. There's no exchange. There was no easy way for me to say I now invest 10 euros, because I wouldn't have made more money than 10 euros back then. But there is no way to get that. Where do I get money? I mean, I didn't
What
even
about
take the
mining?
time
What
of.
about mining in that time? So you didn't come across
You know,
mining?
one thing is that there were faucets back then where you got 50 Bitcoin, or I don't know, 10 Bitcoins just by filling in a captcha. But I didn't find them. I just read something about them later, years later. So, and mining back then, I wasn't that deep into server stuff. I was on the algorithm side from mathematics to write the code, but this how to run something on a server, backend stuff, I had no clue about that. So it was like running something on Linux in the a service or something. no idea. So mining back then was like, I have no idea how this goes. It sounds complicated, and I really, I thought like, I don't need, it doesn't make sense to look into that. It doesn't make sense to invest time to look into that because this will never catch on. This will never work because no one will use that. This is some geeky stuff, but yeah, okay, fine. So I completely discarded it. I was like, that's never gonna happen. I still have the hard drive where my old wallet is on. It's just not readable anymore. So I'm 99% sure that no Bitcoin are on that wallet. But I created the wallet 2010. So
Okay.
it's just a bit sad that the hard drive is not
So you
readable
were
anymore.
there in
So,
the
oh,
right time, right place, but you were just not convinced that this thing's gonna ever fly.
I was just stupid.
Yeah, okay, that's a more direct way to say that. I didn't want to say it like that.
I'm, I'm,
Yeah.
I'm, I'm a mathematician. I say it as I think it. I'm socially completely an asshole. So
Yeah,
I'm straightforward.
but I can understand if you don't if I mean it's always easy to look back in time, right? And say, ah, yeah, of course. I mean, at that time, so many people didn't get into their herd maybe about it. They thought it's like complete
I mean,
bogus and useless and whatever.
said to be honest, if you're realistic, it's like yes, it hurts that I had a wallet. I just if I would have just let my computer spend a day to investigate how my works and let it run for a day or two, I would have a few hundred bitcoins, I guess. I don't know, maybe thousand.
Yeah, you might have sold them
But
for $1 or something like
exactly,
this, right?
if I had gotten them back then, as soon as they are on an exchange, as a student with basically no income, I would have sold them soon.
Anyway, yeah.
And I probably that would hurt more if you know you sold 1,000 Bitcoin for $10 back in
Absolutely.
2011,
So
for
you had
example.
no bitcoins, so nobody cares, right? So you didn't really lose
So it's
money
like,
there.
yeah, I was early, I was stupid. Yeah, bad luck, but better than
Okay.
selling early.
Denial, complete denial, not interested, useless, will never fly. So, but then what happened that you then got into crypto? And if you wouldn't have gotten into crypto, we wouldn't sit here today. So, what was then the reason, the
The
person,
bull market happened.
the last bull market, 2017?
Yeah, kind of. I mean, it was that in early 2017, I think it was January 2017, um, that there was Bitcoin made it to the news. So I mean, you read about it before, but I was always like, interesting, but never really had something. And January 2017, I was like, there's another article in Bitcoin is close to $1,000, and I'm like, I looked into that 2010.
Wow.
This thing it was interesting back then. I understand how it works. I was already into technology. Um, it looks like there is something behind that. There might be something in that. And I remember that I talked to my wife, like I'm thinking about investing, just buying something, just $100 in Bitcoin. And she was like, "Why? It's just for dark road, illegal stuff. Do you want to buy drugs now or what?" And I'm like, "No, maybe this thing really catches on, and maybe there is something." And I already looked into it back then, and it made sense. I said, "Yeah, whatever, $100, okay, yeah." So I bought the first. It sounds wrong if you say you bought the first Bitcoin because it wasn't a full Bitcoin, but it was when Bitcoin was at $900. So I got a three digit entry. That's
That
something.
is worth something, right?
Yeah, it's worth something. But yeah, and then 2017 happened, and because I was in Bitcoin, suddenly I realized because first, I mean, I bought my first Bitcoin not on an exchange. I bought it with local Bitcoin, where I think it's localbitcoin.org or something, where you have people really peer to peer selling Bitcoin, where they sell you Bitcoin, you send them a PayPal money or something, or you meet them and pay them cash. So no exchange. And I was like, how does this work? Huh? And then I found out that there are big exchanges where you can transfer fiat money over there and Bitstamp and stuff. And
Yeah, and
then I got into
Kraken
that,
was
and then I found,
online at that time already, right?
yeah,
This is how I started, yeah.
yeah. And then I found out, those exchanges they're real exchanges. They are not like retail traders back then, or back when I did the financial stuff, most of the retail traders were like, if you want to buy a stock, you go to your bank manager or bank staff consultant and tell them, I want to buy that. And 3 days later, you get an answer. And you needed to get into some connection to be able to have real access to exchanges. And there suddenly you have an app where you see the order book. You have the full level 2 access to all the data, and you can directly put a limit order yourself into the market. The stuff that we did with the trading systems and everything.
Okay.
But you needed the access back then.
Short question before level 2. Can you explain that quickly? So if there's level 1 exchange, level 2, level 3 exchange, what's the difference?
And it's basically just about the data, what data you have, because every exchange works with an order book. You have the limit orders there, and you might have stop orders there. And level 1 basically means you see the price. You as a trader or you as a participant see the last traded price. You need that, otherwise it's kind of senseless. Level 2 data just means that you see, additional to the price, you see the order book. You see the limit orders. Where are people want to sell? Where do people want to buy? And level 3 would be then to see the stop orders, because on some exchanges, the stop orders. Usually you don't, on the traditional exchanges, you don't have the stop orders at the exchange, but on the poker, at least back then it was mostly like that. So it was hard to know that, but the poker can front run you. Now the exchange has everything. Crypto exchanges have everything on the exchange. And that was the thing. Basically, when I looked at that, I was like, oh wait, there is Bitcoin, which is kind of something abstract, a pure technical asset, which trades on an exchange with the full order book access, where I can do all the order details or order levels that I want. That's basically the exchange that I built back then, just on a real asset with a big market. So playground for Kügi.
Kügi's back.
And you can trade with a few cents and everything. So I was like, ooh, that sounds interesting. And I started trading. As everybody trades in a bull market, trading, making money, or a few money. I mean, I was trading cents. I was really trading. If I opened the trading positions, about for $1 or $2 trading positions, and closed that. So it was really like just playing. But there I learned that even if you know all your strengths and weaknesses, or if you know stuff, doesn't mean that you are able to apply the stuff, say it this way. Because from back then, with the automated trading systems and all my interaction in a trading community back then, it was like, why do traders fail? Why is risk management important? Why do you need a system to trade and not just your gut feeling? What is money management? How do you apply all that stuff? What is a stop loss? What do you do there? I knew all that stuff. I explained it to people before. I told people that they shouldn't trade differently, but they need stuff like that. And then I was sitting there on the phone. Oh, it looks like it's going up. Buy. And basically 100% emotional trading, no logic behind it, just gut feelings.
And every trade was a winning trade.
No, of course not, because I didn't even track them. I didn't even know. I was like up, down, buy, sell. It's the classic story of the rookie trader who does all the mistakes because he doesn't know shit. I knew all the stuff and I still made all the mistakes. That's why I'm like, if anybody is talking about trading and how easy it is to, and you just need to be abstract and you need to be logical and you just need to do that stuff, I'm a mathematician. I'm a really rational, abstract thinking guy. And there I sit there and I do all the emotional mistakes that you can do.
But Kügi, is it not that we all have to make our own mistakes? It's
exactly.
Like your parents tell you, right? Don't do this. Yeah. You have to do it yourself. You have to figure it out the hard way. But I think you were still maybe quite lucky because it was a bull market and I learned, and I suck as a trader completely. I've got no skills when it comes to that. But I thought I'm a real master trader. Because 2017, 18, most of my trades were successful anyway. That's why I was asking you before.
Yeah, no, I mean, um, my luck was that because I knew that, I at least did so much that I said you don't risk too much. You have at least a bit of a risk management, and I was risk averse that I said I didn't invest use all my Bitcoin to trade. I didn't do, I don't know, big trades in the beginning. But I started with just $1 trades and just to play around. And because at least I knew that. And then I started to think like, yeah, I can do trading, and I'm a trader because I have all the experience, and so let's get rich with that. Everybody wants to get rich, and 2017 it felt like everybody's getting rich, and so I started trying to develop a trading system on the stuff. I tried to get professional as a trader. I started to log the trades and find out at least portfolio is going, at least log how I'm doing as a trader. Then started to have a log of how the trades went. So this whole the classic story of how a trader should start if they do it the right way. That you say, okay, you do a journal, a trading journal, where you say, okay, why did I do the trade? Why I opened it? What's my stop level? Use a stop loss, whatever. Or I mean, if you do day trading, not position trading. All that stuff. I started with that to try to get professional, yeah, in the hope of making money out of it, and then being a professional trader, kind of. And yeah, back then, like stuff like you have a triangle, and the bullish break of a triangle means you can take the momentum and run, which worked perfectly in the 2017 bull market. And yeah, then came the day where I'm like, yeah, ascending triangle. If it breaks, you go long, and you wait for it to run into the target. I did that at the bigger top bottom at the top. Yeah, I mean, I did it before. It worked, and then with trading positions. So I was smart enough to have dollar cost average into Bitcoin, have a Bitcoin stack, have my Satoshis, and have a small amount, a few percent of the stack that I traded with. Where I was like, if I make 100% on that every year, it's a nice cash flow, and if Bitcoin goes to 100,000 and whatever, But yeah, opened that, and then the market went down a bit. January 2018, and I was like, okay, it didn't break out to the top, but never mind. Wait, it will come back, and it always did. It just goes up, and it's just let the trade run. I don't want to close the trade now. And then it was like consolidating a bit below the top, and I'm like, that feels like there could be downside, but no, Bitcoin goes up. No, Bitcoin goes up. It doesn't feel good, but it will go up. Well, yeah, it didn't. But it was like I kind of felt the top, but I didn't act on it. It's again this from the rational. I was sitting there and like, that feels shaky. That doesn't feel well. It doesn't feel healthy in the market, because I was sitting there watching the market like an animal breathing. Basically, you sit there and you get a feeling for the market, and it doesn't feel well, but I'm long, so it will go up. And I didn't act on it. I felt the top, and I didn't act on it. I was stupid again. It's a story of me being stupid. So that's how you not become a crypto millionaire.
Okay, so you didn't get the crypto millionaire in the last bull run. So you said you have to give it a try the next time. So then the market came down. You didn't sell, I think, like most of the people.
I dollar cost average.
Okay.
I kept buying. I saw it as buying opportunities. So basically, I did everything right in my first bear market, because I was like, I believe in the tech. It looks good, and stock to flow model and everything all looks good, all makes sense. I bought back then. I was like, with COVID, in the COVID crash, I was lucky, because when it came to 8,000, I was like, ooh, it came down from 10,000 to 8,000 or something. And then I was, that sounds cheap. I think I buy something. I sent money to the exchange, and it took 3 days to get to the exchange, because bank account and everything. And I was like, oh no, it takes so long until I can buy. 2 days later, it was at 4,000.
So good timing.
So it was a perfect timing because if the bank account would have been faster, so thanks bank for being
Yeah,
slow.
I hope you sent them a thank you note. Thanks for being slow. You saved me a lot of money and pain.
So I bought kind of the bottom, but dollar cost averaging. I was like, it was really just luck that I bought down there a bit, and yeah, then it came back up. And during all that time, I developed a trading system on Bitcoin based on all my technical analysis, and because I developed a system from manual trading where I said like, okay, that's when I enter, and then I started backtesting
Mhm.
it, doing it the professional way, making it really like a profession where you need to invest time, need to do the research and everything, and found out that there's a system, and I wrote it down, all the algorithmic stuff of my trading system, and tried to stick to it, and I failed. I'm a developer of algorithms, and I failed to follow my own system, although I knew that my system was profitable. I really tracked it for 4 months, and I had a sheet where I said, this is now the entry. And I always, when I entered the position, I was like, is this according to the system?
Mhm.
And sometimes I filled in that column because first I was like, I didn't have the column, and I just and I found out, yeah, in hindsight, it wasn't according to the system. I just felt like there will be a signal, and I'm smart, and I'm smarter than my system, and I
I
can
hear a lot of
outtrade my own
feeling. I
system.
hear a lot of feeling in these stories. There's
Yeah,
always a
there's
lot of
emotions in
feeling
there.
and emotions
No,
involved.
and then I added this column where I said, I need to fill in, is this according to the system, yes or no? And I actively filled in no because I thought I'm smarter than my own system. And I had the chart where I had then the chart of my own performance going down. And I saw that if I only did the trades that I filled in as according to the system and just didn't do the ones where I filled in no, it's not according to the system. When I entered the trade, I filled in no. If I didn't do them, this, the balance would have gone up.
Perfect system.
I saw that,
Perfect
and I
system.
didn't manage to stick to the system.
Just the user didn't really play well with the system, I think. Huh?
Yeah, it's just the emotions because you think you're smarter than the system. You think you know because you developed the system, so you see it and you already know and everything. And then I was like, I need more, more help to stick to the system. I even tried to motivate my wife to follow the system, to trade for me. So here's the system, do that. But she was like, no, doesn't sound that
Not
interesting.
really, not really. Okay, that was Bitcoin. So it's exciting, cool story. Hey, how? But
Yeah, but
how? Yeah.
just one last sentence of it because that's where I did the first crypto trading system because there I automated my own system. Because I tried to make more and more help for me
Mm-hmm,
to
mm-hmm.
stick to the system, and then I found out, wait, the whole system can be fully automated. I don't need
Okay, okay.
any. I analyze the charts. It's 100% technical analysis. If I just tweak the system a bit, change a few settings there or a few logics, you can 100% automate that. I backtested it and it worked. So I was like full automatable. So I wrote a bot that trades the system, fully automated, and I set it to live and did 100% in the first year. So I was like, and during that time, I was like, because I'm like a gambling addict. So I was like, I want to still trade. So I had the system running, and I had a small account where I traded myself and tried to still outsmart the system. My account was going down, the system was going up, and I was like, why am I still trading? And I still did. So yeah, even if you
Even
know
you have,
all the stuff,
and you're risk averse, right? So actually, you don't want to lose money, but you still enjoy
yeah,
the
but
thrill.
yeah, it's I'm a complete mess.
Okay, so
Because yeah,
okay, but that was a good turn. So even admitting that you're a complete mess, you did something right. You came to DeFiChain. How did this happen?
again, I was early
Yeah, this is
because
sometimes good, doesn't work for you, as we learned already. So
exactly.
how did
Um,
this happen then?
um, yeah, I was in the Bitcoin community and I liked all the stuff, and I watched Julian do the videos and all this stuff,
Okay.
and he did those crypto nights back then, where he got
Where was
people
it? Was
into
it in
crypto.
Linz? Was it in Linz that did you attend one of the crypto nights then?
It was the crypto night 2019 in Vienna.
Ah, cool.
And yeah, there he basically talked about DeFiChain and he talked about decentralized finance. And it was the first time ever, he said it was the first time ever that he publicly announced DeFi Cake that he likes decentralized finance and that's maybe a new thing. And he will start a company, Cake, which does decentralized finance. And he's thinking about what they are planning to start DeFiChain. And if you are an aggregated investor, talk to us because there might be opportunities for DeFiChain. So
Okay.
it was still in the planning phase of DeFiChain. It didn't start yet. It was just a planning phase, but they plan to do something like that. And I'm like, that sounds interesting. Let's go on
Let's
Cake.
not do it.
Yes, exactly. That sounds interesting. Let's not do it. No, it's as with Bitcoin. That sounds interesting. There's logic behind that. And I'm like, okay, there's Cake. I register on Cake. I get on Cake. And I have a really early registration date. And then I saw the platform and like, what can you do there? You can stake Dash and other
Boring.
coins. I'm like, I have Bitcoin. And then he started with the lending of Bitcoin. And I'm like, how do you get, because I understood staking. Perfect. I understood staking, Dash and everything. But how do you get yield on Bitcoin? You can't get yield on Bitcoin unless you trade on it or something. I didn't understand the mechanics behind it that you can say, okay, you borrow it to people and you get loans, or that you have contango trades or all that stuff. So there are cash flow strategies on Bitcoin. I now know that. Back then I was like, there is no free lunch. How do you get that without risk? There must be risks involved. I don't give my Bitcoin from my cold wallet on the platform on a centralized exchange. I mean, are you crazy? On a centralized service just because they pretend to give you a promise to give you rewards. I'm not doing that. I'm not stupid. Well, I am stupid, but I said like, no, I'm not doing that. So I had the account and did nothing with it for 2 years, I think. And so I didn't have Bitcoin on Cake when the airdrop came. Then I started to get Bitcoin on Cake later when they started with the liquidity mining, because there again I was like, okay, I understand that. I understand how liquidity mining works. Why liquidity mining gives you rewards. That makes sense that you get the commission and everything. And there I then started to buy a few DFI. And back then it was also like, where do I get DFI? La token. That doesn't sound like an exchange. It's like,
Yeah, right.
what is that?
There was no proper exchange. Yeah.
So I bought it directly on Cake. I mean, the classic problem on early adopters and everything. How do you get it, and how do you get the community going? So I got a bit DFI and a bit Bitcoin on there. Put some in staking, some in the liquidity mining on Cake, and just let it run. There was nothing big behind it. I also wasn't involved directly in the Defichain community.
Okay.
Back then, my Bitcoin trading system made 100% in a year, and I was like, I'm crazy. I have now a system that makes me 100% a year
I'm
on
rich.
Bitcoin.
Unbelievable.
I'm rich.
I'm
I'm
done.
financially independent. Everything is great. Well, 100% on a small amount is still a small amount, but
But it's still 100%.
if you compound it and think, I'm crazy and I will get rich. So I started to go the route of reducing hours in the company, because it was also COVID back then, where they like a lot of time with the family, and I'm like, it sounds far better to have time with the family than to stress out in a 9 to 5 job. So better sit 24/7 in front of the market and stress out. It sounds far more rewarding.
It's far more fun.
Basically, far more. So that was basically the thing where I said, okay, and I think that's the good thing from the trading stuff, because the system, it made 100% in 1 year. The next year, it basically lost everything that it made, but it made me confident enough to step down from the 9 to 5 job and dive deeper into the system, into the crypto system, crypto community basically. I mean, I was in Bitcoin. I was analyzing Bitcoin on Twitter. I don't know, 200 followers with technical analysis and stuff, on-chain analysis and all that, because I'm into the logics behind it. I'm into the structure and the data behind it. And yeah, then I also had this, I want to get more involved in there. I want to get more on a computer side, on a coding side, because I'm a coder. I understand the code. And then there was this I would like to be a Bitcoin core developer, go into that, but Bitcoin is like really evolved already, really crazy. Big established players, it's really hard to get a grip there. And then I found out, yeah, like DeFiChain. I heard something about DeFiChain, and DeFiChain is basically, it's based on Bitcoin, so it's basically the same code. So if I get into DeFiChain from the code level, I get a better understanding also of Bitcoin because it's the same mechanics, and it's true. But there, it's a young community, it's a young project where you can make something, where you can be of value, because if you read into Bitcoin, it takes years until you are on a level where you can provide any value, because so many people already are so deep into it and you have such a big community. And in the DeFiChain, it was more like there's a young project that, yeah, it's more profitable, or the system profits more from me than if I go into Bitcoin. So I started to look into that, and I tried to just analyze the whole code from the start. Where I said like, okay, how is this working? Which is crazy, and it's really complicated. If you start on that code base from zero. So that didn't go that well. But I had a first grip on it. I had a first touch point. And then the D tokens came along, and I was like, that sounds interesting. That's really a new thing with the vaults and everything. And there I dived
This was
deeper.
December 2020, right? No, yeah, December
2021.
2021. D tokens was 2021. That's right. Yeah.
Yeah, D tokens were 2021.
Yeah.
So last December. And that was like, I mean, also with the APRs, and I was like, where do 10,000 APRs come from? How will that behave? Because that's too good to be true. Of course, it wasn't. I'm like, okay, how will this behave? How will this work? Where does the money come from? Because there I was already smart enough that I say, okay, it's not everything is too good to be true. It's sometimes it's just information arbitrage. Sometimes you're just early and there are risks involved, but if you know about it and understand it, you can take advantage of it. So I looked into that, and I got deeper into that, and got into the vaults, how the vault mechanics, how the D tokens work, how the whole thing works. And yeah, then I found out what I tried with Bitcoin also, that I access it programmatically with the RPC connection on the full node and all that stuff. Because I have a full node running it, so I knew how that works. I was like, okay, that works with DeFiChain too, so you can do stuff there. Because you have a lot of things that you want to do, trades, premium, arbitrage and stuff like that, where an automation helps, that you say, okay, you run it automatically. And yeah, with all the experience from doing an automated trading bot in Python came in, where I said like, okay, I know how to run a trading bot, how to run a framework in Python. Let's do that, because I can access from Python, I can access the full node. Let's just see how I can automate or do stuff on the DeFiChain. Yeah, and then I had the premium arbitrage system for the vault arbitrage, and then we came up with the vaults, and in the community, in a small community, we talked about what you could do there, if you could improve the vault usage, where you say, okay, get it into liquidity mining, take it out of liquidity mining. So we had the idea of what's now called the Vault Maxi. Back then it was DeFi Vault Reward Max Optimizer or something. I don't know.
Okay, you found a better name, that's for sure.
I'm good at naming things, right?
Yeah, I see that. The Vault Maxi. So did you do the Vault Maxi? Was there a whole team involved, or was this your own baby, or how?
No, that was. I mean, it's always the question what you count, because the idea, the original idea, I think it wasn't my idea.
Okay.
It was someone mentioned that yeah, it would be great if you since you do the liquidity mining, it would be great if you can go to
So
160%.
that you maximize your collateral in the best possible
You,
way.
yeah, exactly. You maximize the rewards on that collateral, because and you can just adapt it. You just need to adapt it all the time, but you can't sit all there all the time. So could you automate that? And again, the fun thing is when the whole thing came up, I was like, why should I do liquidity mining with the tokens? I just buy leveraged DFI and I profit from the run up. I didn't see the benefit in cash flow, or the big benefit in cash flow back then. I was still the trader mind where I said benefit from a bull market. Uh, but yeah, the idea came up and I'm like, yeah, it sounds you could probably do that. And over some weeks, it was like, okay, the price is not going to the moon, not going to 50 right away. So maybe cash flow makes sense. And
Sorry
it
for that,
just,
actually.
yeah. But basically, the thing was then that I had this the leverage position on my vote where I said, okay, I'm in DFI. I buy discounted DFI because DUSD was in a premium. But I can't go to the max with the limit because otherwise I get liquidated. So I have collateral available in the vault. So let's just use that for the vault for the liquidity mining, and that's what the whole idea came from. That I say, okay, I don't use the whole vault for that, but just take anything, do something with the vault, and then you have collateral left that you couldn't use otherwise because it's too risky. And if you have an automated system that manages that, it's yeah, it squeezes the remaining rewards out of the collateral. And so I started developing that on the full node on the RPC. Yeah, and then one thing led to another, and I used it more and more. And basically, I think I started using it end of December, something like that, on the full node, and was nervous like crazy over the Christmas holidays because I was skiing and everything and had the stuff on the server. I think I put it on the server December 22 or something, 22nd. So right before the holidays. And yeah, early development, bot.
The,
Yeah.
the Vault Maxi sounds like an amazing idea, right? So maybe to sum it up, you have collateral in a vault, you take a loan out and you liquidity mine with these loans. And you use your collateral to the best possible extent, so you drop your collateralization ratio like crazy. There's always risk involved, right? Or is this completely risk-free? I mean, this thing works
Nothing is
very,
risk
very
free.
well, right? We know this. I've seen you've done a fantastic job in documentation, and there's a lot of kind of support for knowledgeable people out there. Is this something that you would recommend for everyone? Is this maybe talk a little bit about this? I don't know. I'm not using it,
Basically,
me
no.
personally. Okay.
Yeah. What?
No, I'm not using
No. Yeah. We need to talk. No, that
it. Yeah, I need somebody to help
I
me to
think it's
set it
good.
up. You know, I'm completely dumb when it
I think
comes
my
to this.
internet is gone. I'm out.
Hello, hello, hello. No,
No.
I saw the documentation. I was talking with you very, very early, and you showed me everything. So I've seen it. But talk a little bit about it. Is it a
No,
mesh product? Is there a support team behind it? Because I'm sure a lot of people are going to hear about this now, and they're going to say, "Hey, Voltmax, it sounds awesome. I want to get into that." What's
yeah.
the deal
The,
with them?
the thing is, the Vault Maxi itself is now on a level where I say, so the code itself had so many corner cases that we found out during usage that I'm now pretty confident that we found basically every corner case and a lot of corner cases. But with using the whole thing, there is so much involved. Because I mean, just from the early days, I had it just on my computer on a full node because I was developing it and there was like I didn't have it on a server or anything, and it's just running in my development environment and everything. And then you have your vault and the bot, the Maxi, manages everything, and you put it on 170% because you think like, yeah, 170, don't get crazy and everything. And then you go to sleep. And the next day you wake up, you come to the computer, and you see that the computer restarted overnight because it did an update. And you find out that your vault was unmanaged for for 4 or 5 hours, from 2 or 4 in the morning. I don't know when the update was, till I wake up. So I nearly got a heart attack. I was like, what's going on? Where's the stuff? I didn't have notifications back then. I didn't have anything. So crazy. Um, and that's the thing. So I say, okay, the bot would have worked perfectly, but if the bot is down, you're out. The early version, or the version I'm mainly using, is still on a full node, where I say, okay, you have the decentralized way, but that means you need to manage your full node. You need to manage your full node on a server, on a 24/7 server, that you say the full node is running all the time, syncing all the time, and the bot is running all the time. So you really need the redundant server, internet, everything. I have people say, yeah, I can run this on my own at home on a Raspberry Pi or anything. And that sounds nice, and that's a nice tech play, and
Nice
it's
gadget.
a hobby project. It's a gadget, yeah. But if you really want to run that on money, you easily discard all the risks, where you say, do I really have redundant internet at home? Do I really have redundant power supply at home? Because here I'm
We
usually,
just saw thunder and
yeah,
lightning, and everything was gone, right?
I mean, it was gone for a few seconds, and
Yeah,
just
but
the internet and the modem needed to
that
restart.
might be
But you
from
don't know.
yeah.
Exactly. Worst cases, your computer gets stops because of the energy spike, or electricity spike, and then it's out. And what do you do now? You don't have anyone, I mean, because if you're at home, fine. But this needs to run while you are sleeping, while you are gone for a trip, because you don't want to be available and at home at the computer all the time. So running that at home is just crazy. You can't do it for your money. Running a server, having the server up to date, having the full up to date, is something that not everybody can do. That's You need experience for that. That you do it, that the server is safe and not hackable and everything, and that it's running reliable and everything and stable. And then you have the case that you say you are out on a trip, holiday, whatever, and suddenly some problem with Defichain happens, because we saw it in January and everything, when you say there's a problem, we need an emergency hard fork. Shouldn't happen. Will never happen, of course. Fingers crossed. But it shouldn't. We try everything that it doesn't happen, but it could happen. That something is, there's a problem, and then you suddenly need to update your server, because otherwise your full node, it stops. I had that with Kush. He also runs it on a full node. The co-developer of
Okay.
Vault Maxi, but we'll come to that. And he had like, suddenly my Vault is my Maxi on the server is not doing anything anymore. What's going on? And I'm like, and he's like, if I check it, I get the old Oracle data. I got the old price feeds. I'm like, do you get new blocks? Do you even get updates from the blockchain? And he found out that he forgot to update with the stock split hard fork. I think he updated too late. So he updated after the hard fork. So it was already on a wrong chain. And it was like, yeah, that's stuff that can happen. Even if you are experienced, even if you know what you're doing, stuff like that happens. If you just miss one update, if a bit late, that's why I was always like, this Vault Maxi, that the first version, the Python version of the Vault Maxi, I gave it to other developers in the community. I put it on GitHub, so I'm like, I do stuff on GitHub. It helps the community. I want to share the stuff. But please know what you are doing. If you are a developer, if you know how to run a server, if you know the risks and everything, you can use that. But a lot of people were like, it sounds so great. I need that. I want to use that. And so we had this idea that we find a way that you don't need a full node. And I was also like, I knew that via the Ocean API, with the Jellyfish API, you can do trading stuff and do stuff without the need of a full node. I heard that from the tech talks and everything, and I knew that the Light Wallet is working with that. So I'm like, you probably can use that. And that's where I joined forces with Kush, basically. And we said like, let's look into that. We had no idea about AWS. We had no idea about lambdas or anything. So we just dug into that, and it was basically, I, I motivated Christian. I was out on vacation for a week, and he was like texting me like, yeah, I'm looking into the AWS, and that AWS, it's crazy, and that's just a rabbit hole, and I think I found
It is,
something.
right?
No, that's not working like that. Nah, maybe like that. Basically, while I was on vacation, he did all the basic work to know how a Lambda works
So
and
he
how that
got AWS certified over the weekend, right? Did a couple of
kind of. Yeah. And I'm like, okay, because we know that the algorithms, the logic works from the Python version that I have, where the whole calculations are there, and we just ported those calculations to the Ocean version, to the AWS version, because there you don't need an infrastructure, you don't need your own server, you don't need to take care of
the
anything
Lambda is
except for
serverless, right?
exactly. It's
Yeah.
completely that's the idea. I mean, it's AWS Lambda because you have the free version there. I think it was basically because the free tier, and we had a sample code from the Jellyfish API from the Burn bot from the team where they did trading bots, the Burn bot from BTC, and we base it basically on that knowledge. And there you don't need anything of that. So even if you don't know about servers, if you don't know how to run a server, maintain a server or anything, you can do that. And there I felt safe that I said, okay, we can provide that to users that they can run that. But we soon we realized it this way. We realized that there's still a lot of risk involved. And that's when you start doing it and when you're like, okay, what do you need to know and what do you need to take care of when you do that? Where are the risks? It's risk-averse person. So I'm like, if I give that to someone and I let someone use that bot on a vault with significant amount of money and significant in their net worth, so totally different for everybody. But if they want to do that, it needs to be fail-safe. It needs to be as risk-free as possible, because I want to sleep well. And that's why we have disclaimers like crazy, and all these risk warnings, because we realize that when we thought about what can go wrong, and so many things can go wrong. Not just that the bot has a problem, because that's mainly sorted out now, where we say, okay, Lambda, it can't happen that the server dies, that the server crashes, that the full node crashes. It can happen that the ocean is down, but if it's down for a few minutes, we don't care because we have an hour to update the ratio. Also, we have this do the maxi in one region and do a fallback in another region, that you have one in Singapore, one in the US, so that you have, if one ocean front end or
So
one
absolute
ocean
redundancy in
endpoint,
some way. Or
that you have
redundancy.
the redundancy in your AWS and with the ocean, because we saw that ocean was slow in Europe a lot of the times, but it wasn't in US or in Singapore. So you can do that and stuff like that. But still, if you put in the wrong numbers, if you do something with your vault, I mean, like people leveraging the vault and buying DFI up to a ratio level of 190%, and then activate Vault Maxi. Vault Maxi takes it to a 160, for example, and they think, everything's safe. Vault Maxi is managing my vault, and then DFI drops, and this last 30% that the Vault Maxi can manage shrink down to zero overnight because collateral is dropping by 30%, I don't know, and suddenly you get liquidated because you didn't notice that. That's why we introduced the safety level where we say, okay, the Maxi warns you when something happens. Also, the stuff that you build up the bot and it runs, it goes to the 160%, and then suddenly you come to the idea that I was now in QQQ, but now Arc has a better rewards. I switch from QQQ to Arc. And because you don't understand how the bot works in detail, because you didn't write the code, you're just a user of the bot. You don't understand that you can't do that, you shouldn't do that, because now the Maxi has no exposure whatsoever that it can work on. Because basically for the Maxi, you created a QQQ loan, and he has an ARC position, but there is no ARC position. So as soon as he wants to reduce the ARC position, there's nothing he can reduce, so he can do nothing. And you're on your own. And that's why we added all those warnings. So there's a lot of cases where you as a user can go wrong if you don't know what you're doing. That's why we wrote that huge guide where it's like, do that, do that, do that, be careful of that, be careful of that, understand those, please really only use the whole thing if you understand how it works, what it can do, what it can't do, how it can go wrong. Also the stuff, and the thing is, you sometimes are like, oh boy, what did we do? Because we really, me and Krish, we had a discussion in the early days, when we still had the alpha version, we had a discussion, do we really want to do that? What do we, because back then there was a short time where vaults got halted because there was something with the oracles. We had an oracle problem overnight for 3 hours, and I was going crazy because I was like, the vaults are halted, DFI is dropping because halted vaults always get a bit of uncertainty in the market, so vault DFI is dropping. And I'm like, oh boy, if DFI is now going below the collateral ratio and the vaults go out of the hold, you might get liquidated right away. But you don't have time to pay back the loan. And what if people get hurt by that? What's happening?
What did I do?
Yeah, what did I do? Basically, it was an alpha version. We had the early adopters.
Yeah, but it doesn't matter,
everyone,
right? As soon as you get the code out, there are always people picking up on it, and they don't care if it's alpha, beta, whatever. They just use it, right?
And that's where we had this discussion. Do we really want to do it? Where we had basically a discussion where we said, what do we need to do that we feel safe, kind of? So safe, not in a way that we say, okay, you add a disclaimer, but that we say we did everything in our hands to prevent people from using money. Losing money. So that if someone is losing and someone gets liquidated, we really can say,
you've done
there was nothing more. And we really had this discussion, do we really want to do this? Can we put it to a level where we say, okay, it's the risk-reward ratio is good enough that we say it's a benefit for the community, but not too much of a risk for the people. And that's why we added all those warnings. That's why we added filters as crazy. And still someone managed to get liquidated because they had it running. It ran perfectly. They never activated the notifications because we added the Telegram notifications so that you get that your phone basically starts vibrating
at least
all
your
the time.
Phone knows that you get liquidated, even if you
don't know. It's like it knows that there is something wrong. That the bot, if the bot realizes there is something wrong, it tells you right away. So even far before you get the risk of liquidation, it's like, I can't work with the parameters. I don't have exposure at all, so I can't save you. You get warnings all the time. But they started the bot in the test phase with low money. It ran. It did exactly what it should. They just saw that the vault is happening. No notifications activated at all. Then they changed the parameters to a less risky parameter, but they changed it to parameters that didn't work with the bot. Because we need at least 2% range. And they changed it from, I think, 152 to 154 to 1% range, a bit higher. And we're like, the bot, if you had a notification, it would right away send you, I can't work with that parameters, change the parameters every time he gets executed. But they didn't get the notification. Nothing happens. And overnight, DFI dropped. They were like at 155% already. DFI dropped a bit. They get liquidated because user errors. And you can easily say that's user errors. It's not my fault. But I'm like, there are stuff that you can do to prevent it. And now we have warnings in there. Now we have safety measures in there that even then it tries to save you and it tries to fix your wrong inputs. But that's the thing. And that's just the usage stuff of the risks. That's not even the security stuff of the risks. Because in my opinion, the biggest risk that you have with the Vault Maxi is you have to put your seed phrase, your private key, onto the server. You have to put your
That
key
means
there.
if you have a shitty password on AWS and somebody hacks your AWS account, at the end they have the seed for your wallet.
If I say it this way, if you use Vault Maxi on AWS and don't have multi-factor authentication on your account, you're crazy.
Yeah, people are, right? They don't
Yeah, but
I know
that
people,
and
they
that's
have password 1 2 3 4 to secure some important
exactly, it's like
information.
password Vault Maxi and stuff like that.
That's a good one.
I
It's
don't
creative.
know. It's a guess, but stuff
But let
like
me
that.
try.
Where I say that's a real big risk. That's why we have this.
Mm.
Don't do that. And the other thing is this code. The problem is you need to upload a zip to AWS.
Mm-hmm.
Um, Basically, we made it easy with our guide that you can easily put it. If you use our guide, it basically sets up the whole AWS perfectly. You don't need to do anything. You need to do really not much. You
Use the
don't need to
cloud
understand the
formation, or what is this?
cloud formation exactly. It's one click and you set in a few
Okay,
parameters and
okay.
then. So it's a few steps. It's some say it's too complicated and they didn't understand it, and I'm like, if that's too complicated for
Then don't
you,
do it.
please don't use the Vault Maxi.
Yeah, the
Exactly.
good point, good point, yeah.
Yeah. And it's a bit on purpose where we said, um, for me, our guide is already borderline to being too simple because it gives the false sense of security where I say they did that and they know what they're doing. I just fill in the numbers and everything is fine and nothing can happen. Um, and the thing is, we make it easy, and why it's also a bit borderline, in my opinion, that within the decentralized space, within the crypto space, I'm honestly promoting a don't give your seed to anyone, don't show your private key to anyone,
Good
don't do
point.
anything with your
That's a good
private key.
point, yeah.
That's your thing. You should never upload, and that's the
But
thing.
Jeff Bezos is not gonna steal your seed, right?
Me as the guy who basically provides the guide, or Chris wrote the guide, but me as a, I'm saying don't upload your key anywhere. It's like, well, but that's the thing, and we are kind of making it a bit normal to upload your key somewhere and to use code from someone else where you don't understand the code, you don't know what the code is doing, and you use that on your private key. You give that code access to your private key and to your full wallet. And that's a super risky part because if I would be a bad guy, I mean that's on. By the way, that's the first time someone sees my face on YouTube, right? So that's the
I
first time.
thought about this. I
Yeah,
What do you want to say most likely now is, if you would be the bad guy, this code could do a lot of harm of these people out there in some way, right?
yeah.
Yeah.
Exactly. That's what I said in the beginning, or when we published the stuff. Where I said like so many people are using Volt Maxi, and I was really like, do I like this or do I hate this? I'm now shocked that people give so much money to a code that's coming from an anonymous person on the internet where you don't know anything about them. Why do they do that? Are you crazy?
Is
Because that I run it, okay, that's my code, I understand it, I know what's in there. That other developers who get the code, review the code, and build the zip on their own. They get the code, they know now the code, and they build the zip and say, okay, I put that on my server. Perfectly fine. If someone who just takes our cloud formation and they give us access to the AWS, give us they run our stuff on AWS, or AWS, sorry, English. They run that, and I'm like, you don't know what's happening. I could theoretically, and it's always like if you say that you sound like a scammer, but
no, I think this
I,
is
I'm
really
not
good to say that.
no, I'm not planning to do that, but I could theoretically, just to understand the attack vectors, the threat vectors. It's like I could say and do a new version of Vault Maxi. In the source code in the repository, everything is fine. It's just an update. And in the actual zip that I upload to AWS so that everyone can easily update their code, what they did already a few times, in that zip, I add one function that's basically 5 lines of code that after, I don't know, a week or after the update or at a certain block or whatever, your vault and everything that's in your address is sent to my address. I can easily add that theoretically. It's done within one block. As soon as you find out, there's no way of changing that, of doing it back. I could put it in that I say all the Vault Maxis do that at the same block. So as soon as someone reports Vault Maxi moved stuff, my account got hacked, everything is gone. And all the funds that are managed by Vault Maxi could be gone. Or it's possible to do that, and that's a realistic threat vector if I'm the bad guy.
So how can people protect themselves against this now? So assume you're not the bad guy. Maybe as a last word of warning, how can they protect themselves now that somebody else is not doing this and putting them on the wrong track, and then they upload something? Yeah. What do you recommend? How to deal with that threat?
That's the thing why I, in the beginning, and I'm still on this, I want to do as few updates as possible, because I will never, and that's really, if you're using Vault Maxi, only take updates from the official GitHub repository. Never follow a link to an update. Save where the official GitHub is, the official repository. It's my repository. Save that and use that link. Use the guide from that repository. Use the zips that are in that repository. I will never ever send anyone on any channel an update with a fixed version or anything. Even if you report a bug and say, I have this bug on my stuff and I can fix a bug due to your feedback, I will never send this person directly an updated version, because I know that this is the greatest risk that there is. Because if someone thinks it's normal that me or any other, or Krish, any other two people, but if one of us sends them look, you are a great user of the Vault Maxi, and we like
update, your alpha, whatever, alpha, beta, whatever.
Yeah, we have a special new update that gives you that and that new feature, and just upload that and everything's fine. And suddenly that scammer gets access to your keys or to your address and can take everything out. And that's why I say I want to do a few updates. And I try to have like all the updates we did till now, since the V1 update or V1 release, you don't need to install any update. That's why we had a long test phase on the V1 where we said, as soon as we release version 1, I don't want to have anyone need to update after that, because they should be in a position that they say, okay, I run this on the test code, I run this on test Vault. If everything runs fine, I feel safe, and I go along and I have it big, and I never update it. I just let it run, because if I update it, I have the risk of getting new stuff in. So I don't want to have the need to have a security update or anything. We had updates where we said, okay, we improved the ocean or reduced the ocean cost. We improved the safety of the user inputs, but that's an optional update. You don't need to update it. If you start with Vault Maxi now, use a new version, but you don't need to update. Even the V2 with the single mint, where we say you can make better use of the collateral, also use the DFI DUSD pool and everything. It's still, if you don't want to use the new features, keep the old one. Don't update, because as soon as you upload the wrong code, you're fucked.
You're done. Exactly, that's the right word. I didn't want to say the bad word.
Yeah, and that's the thing. That's the risks, and that's in my opinion the biggest risks, that you don't know what you're doing and therefore mess something up with your settings, that you get hacked because you mess up something with your security, or that you get scammed into uploading the wrong code and you get liquidated. You get your vaults and all your money taken out.
Fantastic. Good last words regarding the Vault Maxi. I think that's very important. It's a fantastic tool. I think you put a lot of really good work in. I saw the guide. It's really awesome what you've done. But be cautious out there. Don't do the stupid stuff. Don't fall for the easy scams. The scams are out there all the time. Kügi is not sending you 1 BTC if you send him half a BTC, or he's not sending you a code update.
I'm doing that. We will put the stuff in the description.
Normally you do this, right? Okay. So just be freaking careful. Okay, Kügi, We are 1.5 hours into our chat already.
Holy shit.
Yeah, but it was interesting, and I think especially the safety warning at the end, very important. Good stuff. Thanks so much. Hey, last but not least, and then we're gonna finish. Then we are done with 90 minutes today. So that's the extended version of the Fireside Chat this time. Markets, Defichain. How do you see the future for crypto in general? Now you're a believer, before you were a denier. How do you see it with Defichain? What do you want to add at the end, like famous last words in that way?
Famous last words that will never catch up. No, no, that's it. For me, the main thing on DeFi chain is the real DeFi. That's something where I say the economics behind it. The tokenomics is nice, but the real that you can combine crypto with D tokens, with classic stocks in a decentralized way. It was like the first time when I got into the Vault stuff and everything, and understood what's happening there. I was really like, it really blew my mind, because I was like, okay, crypto is nice and everything, but now this is really no middleman, no bank, nothing. I can do this like I wrote on Twitter. I was like, I built up a beta portfolio on stocks on DeFiChain, and I started to say, I think I diversify into crypto. I rebalance into crypto. And I didn't need to ask anyone for permission that I say I take out now, I sell a bit of QQQ or TLT or whatever, or gold, and buy Bitcoin. And any bank asking me for some, I don't know, where did you get the money from, what funds and everything, or freeze my account because it looks illicit or something. I just did it within a few minutes. Everything was there. So the use case is there, the usability, the utility is there. And that's something that a lot of other chains, even Bitcoin, doesn't have that utility.
Okay.
Bitcoin is nice. Bitcoin is a store of value. You have the community. It's a big thing. It's decentralized, uncensorable, unstoppable, whatever. And it has these benefits, and it's great. But this utility that I say, I use DeFi chain on a daily basis because of the trading, but on a weekly basis or monthly basis, on a really where I say anybody could use that and make sense of that, to use that, to say, I have a small beta portfolio there. I get rewards on that, so it even benefits me in the down market. And I do that, and therefore it's such a huge opportunity and huge step toward real decentralized finance, that the market is down now because there's a lot of fear, a lot of uncertainty. The debug is not nice, of course, but it makes sense, looking at how the crypto crash compared to the stock market and everything.
Don't say
But
too much, but that's good for a teaser. Maybe you wanna say quick. We said it at the very end. What we are planning.
you say that because
Okay,
you're the
okay.
teaser. You're the teaser.
Teaser. I gotta tease you.
But that's the thing where I say, markets are down now, but in my opinion, it just takes time now to recalibrate, to get the FUD out of the system, to get the panic out of the system, because we see panic everywhere. We see panic in Bitcoin. It's like, oh my God, we are below the all-time high, we're below the 200 weekly average and all that stuff. It has nothing to do with DeFi. It's like you see the effects of the whole macro panic. You see it also on DeFi, of course. But this will sort of the famous quote, this too shall pass. So we will see better days. And then once we are through this craziness right now, DeFi chain, in my opinion, will be one of the strongest DeFi protocols because we have the utility, we have the stuff that's working. And we see now that it has some early troubles, but it works on the long term. So it's, a lot of stuff.
I never had a child, but I think the good ones make it. And no child is flawless, right? Yeah, I think even your son most likely is not always
Oh boy.
The nicest you can be, maybe a real little devil once in a while. Hey, I like that. Okay, the utility there. So you're still very bullish with all, and I like what you said that we have to recalibrate. I think that's a very good thing, and you're very involved in the recalibration. There are a lot of DFIPs ongoing at the moment, so people gonna hear a lot more about you. So what I wanted to teaser, because I have to give credit to you. You came up with that idea. You're a very technical guy, but I think you can explain stuff in very simple ways. So we said we're gonna make a new simple. We're gonna make a new series here on the Defichain channel, and the title is your title. You said we're gonna call it Defichain Demystified. I find it really an awesome title. Normally you're not as good with naming, but this time you really hit the nail on hit the hammer on the
But
nail.
it's your name.
Was it my name?
You said the word demystifying is from you. You said that when we talked
Okay.
a week
I
ago, and
thought
so
you
I
are the
just combined
godfather.
I combined other people's ideas.
Okay, fantastic. So this time we did a great job. So we're gonna call it Defichain Demystified, and Kügi and me, the idea is gonna be that we take single topics, for example, impermanent loss, discount of the USD, and all these little things, where there are sometimes maybe a little bit misinterpretations or maybe not so correct explanations out there, and we want to try. We are not really good with timing. I learned this today, but we're gonna try to make short videos where we're gonna dive into that. Maybe not too deep, but we dive into that and try to explain these things. And I need you there, so I'm really happy that you said we're gonna do this. We wanna start very soon, in the next couple of days, with the first video, and then we try it out. And if you like it, guys, let us then know in the other video if you enjoyed it, just as a little teaser. So maybe if people watch this in half a year, that's old news. But for the people who are gonna watch this tonight, it's gonna be really the latest shit, so to say. Hey, Kügi, it was awesome. I think we could go on and go on. There's so much more to talk, but people are gonna see more of you. I want to thank you tonight that you've been here and spent the time with me and explained a little. I hope the people get something out of that. If you like it, leave us a like, write a nice comment, be nice to Kügi. I think he's doing an awesome job. Negative comments gonna get deleted anyway. No, if you don't like it, let us know as well. That's very welcome. We try to make it better, but I think it was a good show. Kügi, thank you so much. And yeah, everybody out there watching, have a great evening. Thank you, and bye-bye.
Bye.